Let's try this exam question, question 32a from the March-June 2017 exam paper. So our requirement is, they want us to calculate Petula's taxable income for 16-17. And remember, we should include all the items in the notes from 1 to 9 using 0 if there are for items which are not taxable or deductible. Okay. So let's go from the beginning. She's been employed as a sales manager in Downtown PLC since the 6th of April 2009. And this is what's available for 16-17. Annual salary of $230,000. So this, of course, employment income. Now here, we're seeing some bonuses for her. We have been given the date of payment and the date of entitlement. Now, you know, for bonuses, we use the earlier, so whichever date of payment or date of entitlement. Now over here, you see that she was entitled to the bonus on the 1st of April 16, and that is in respect of the 6-month period for 31st December 15, the 6 months period to there. She was paid it after, but because she was entitled to it within the 15-16 tax year, it will be taxable then, so we're not including it here. Now, over here, date of entitlement is within our 16-17 tax year and also within our 16-17 tax year. The date of payment is after, but that's fine. We use the earlier one, and that's within our 16-17 tax year. So we will include both of these as bonuses in our taxable income. Now here we see she's used her motor car for both private and business. Throughout the year, she's driven 26,000 miles. All of the mileage is reimbursed at 60 pence per mile. Only 21,000 miles were there in the performance of her duties. So we need to do our approved mileage allowance working over here. She was actually paid 26,000 miles at the rate of 60 pence, but she should have been paid for the 21,000 miles business miles. She should have been paid for the first 10,000 45 pence, and then the remaining 11,000 25 pence. So we'll have to add some to her income. The difference we'll have to add to her income. 26,000 into 60 pence is 15,600, which she actually received. Then this is 4,500, which she should have received, and also she should have received 11,000 into the 25 pence, 2,750. 2,750. So the actual mileage allowance over here that it should have been 7,250, but she received this, so we'll have to add the remaining to her income. So how much do we add? Subtract 15,600, 8,350, okay? 8,350 in terms of mileage allowance, we're adding to her income. So over here, we're adding 8,350. We showed you the working. Now, annual professional subscription of $630. This is allowable, and allowable expense can be deducted. And also, she pays a membership fee to a golf club, which she uses to entertain the company's clients. That cannot be reimbursed. She's not being reimbursed for either of these costs, but we know we can deduct this from our employment income. This is an allowable expense. So the subscription, her professional subscription. Okay, over here. Interest of $140 on a personal loan taken out on the 6th of April 16 to purchase a computer for sole use in her employment. Now, you know this is a qualifying loan, so we can deduct this $140 amount from her total income, okay? Okay, now coming to point 6 about her pensions. Her company has contributed on her behalf since 2009. That's fully allowable, so we'll just include a 0 over there. That's fully allowable. Okay, so this is about her property income. Okay, she owns a freehold house which was let out furnished through 16-17. Rent received was $12,000. Now during August 16, she purchased a new washer dryer for the property at a cost of $730. This was a replacement. Now you know we are allowed the replacement expenditure, but only the amount that we would have spent on getting a new machine that would have been the same as the previous machine. No improvements. So the old machine, the cost of a similar washing machine would have been $420, the one that was scrapped. If we bought a new one, it would have cost $420. So for replacement expenditure, the only amount that we will be allowed is this. You're not going to be allowed this amount because that's the amount with improvement. So we can deduct this amount. Then she also purchased a new dishwasher for the property at a cost of $580. That's not an allowable expense because it's only for replacement furniture. So this is not an allowable expense. The other expenditure on the property is $1,640. All of this is allowable. So let's just calculate what that would have been. So we had the rental for the year of $12,000. Then remember, for our new washer dryer, which cost this, we'll only get this as an allowable expense because you can only get the allowable expense, you can only get the relief for something that you would have purchased that is equivalent to what you already had, not an improvement, okay? So this is the washer dryer, the replacement. We're not going to get anything for the dishwasher because that's new, and the other allowable expenses was $1,640. So what do we have over here? 12,000, subtract the 420, subtract the 1640. This gives us 9940. Okay, 9940 is property income so far. Let's see what else we have. Also, she rented out one furnished room of her main residence. During the year, she received $8,900 and had allowable expenditure of $2,890. Now, you know over here we can have rent-a-room relief apply, which tells us that our allowable expenditure can be $7,500. So which method will we choose? We have the $8,900 subtract the $7,500, or the $8,900 subtract our allowable expenses, which was $2,890. This one will obviously result in lower income to be taxable, so we'll use this method. 8,900 subtract the 7,500, that gives us 1,400. So our property income totally is what? 1,400. What's our property income? Plus 9,940, 11,340. Okay, 11,340 is our property income, the total of our rent-a-room income and our other property income. What else do we have? She's purchased $250,000 nominal value of gilts, paying interest at 3% for $300,000. Interest is paid half yearly on the 30th of June and 31st of December based on the nominal value. She sold these gilts on the 31st of October 16 for this amount with accrued interest. So remember, we are going to be taxed on the accrued interest. And how do we calculate our accrued interest? Well, stock values, the nominal value was $250,000. It's 3% per year. And interest was due on the 31st of December. It's payable on the 30th of June and then the 31st of December. So for 6 months until this date. But we sold on the 31st of October. So how much of the interest is outstanding over here? We'll have 4 months of outstanding. So multiplied by the 4 over 12 because this is an annually rate. So we have 250 multiplied by 3% multiplied by 4 divided by 12, 2,500. 2,500 we'll have over here. This using the nominal value, using the annual rate of interest, and then the amount of months that we have the accrued interest of. So we had it for 4 months, and that's how it comes to 2,500. Okay, so let's do our taxable income overall. We had employment income of $230,000. That was her salary. We have bonuses. Remember, we're including 2 of those bonuses, $18,600 and $22,400. This is going to give us $18,600 plus $22,400. This gives us $41,000. So we have the $41,000 for bonuses. Then we had our mileage allowance of $8,350. Then the pension contributions, remember the employer contributed on her behalf, but that's not any addition on us, so that's fully allowable. So what is the amount totaling to? We have $230 plus 41 plus 8.35, 279,350. We have the 279,350. Let's move on. We had the professional subscription that she was allowable, and that was the amount of 630. But the golf club subscription was not allowable, so we have to include a 0 for there. So how much does that bring us to? Minus 0.63, 278,720, 278,720. Then we had property income, which we calculated previously, of 11,340. We had our savings income, remember the gilt interest, the savings income of 2,500, and then this will give us total income. Our total income over here, what will this be? We'll have our, let's go back up and check exactly what we have. We have our 278.72 plus 11.34 plus 2.5. This gives us my 292,560 of total income. 292,560. Then remember, from our total income, we are allowed to deduct our qualifying interest, which was 140. So how much do we get? Minus 0.14. This gives me 292,420. 292,420 as taxable income, and that is what they asked for. They wanted the taxable income in the question, and this is how we do it. So you saw how I went through each and every note, made the workings where necessary, how I did the workings, put zeros in where necessary, and that's how you have to attempt this kind of exam question.